Hey everybody. So today I wanted to talk about moving averages and specifically moving averages for Bitcoin. So we have eight different moving averages here. We have the 100, the 200, the 300, the 400, the 500, the 600, the 700, and the 800. Okay. Now, I double check that these are all here. Yes. Now, what we want to see is, you know, as we go further into this bear market, we want to see Bitcoin testing these resistance levels in these moving averages, such as the 100 here, the 100 day, in which Bitcoin tested it about the second week of August, the second week of September, and it looks like Bitcoin in its recent uptrend in the past few days might test it again around it'll be around 20,800 by the time it probably gets there, if it gets there. So we've seen that this 100-day moving average has been a consistent resistance force for Bitcoin um, just in this bear market. What about previous bear markets, though? Well, let's look. Well, we saw in the 2018, 2019 bear market that the 100 moving average wasn't that much of a resistance. Rather, let's see if it was the 50. It wasn't the 50 either. Let's see if it was the 75. So as you can see, this pattern didn't present itself until this specific market cycle. Let's look at 2014, 2015. Yeah, it's the same thing. The 100 wasn't a resistance force in this market. Rather, it was the 300. And this one was just, honestly, the 2018, 2019 bear market was more of a went down, stayed relatively the same, then just went back up. I bring this to you because we can look at the points where the moving averages intersected over each other to potentially analyze where we are in the market cycle. So we see currently we're heading towards this very light green. I believe it's the 400. Let me check. Yes, it's the 400 moving average passes over the 800 moving average, passes under the 800 moving average. So let's see if that's happened in the past. So it happened in the 2018, 2019 bear market, but only after Bitcoin had already gone up from about a low of 32,000 to 58,000, which is almost a 100% increase. Let's see in the 2015 bear market. So this was relatively sooner in perspective. Um, However, Bitcoin did have that movement back above the 100 and the 200 by the time that it passed under this, right? We saw that in this bear market, the 100 passing over the 800 was also, a sign of maybe the market bottom. Let's look at the 2018. Yeah, so this happened when the market bottom was already in. Right. Let's also check if the 600 and the 700 passed over each other because that might be something that might happen in our bear market. So we're right here, the 600 and the 700. They only crossed under each other at the peak. The 600 and 700. So this, I believe the 2015 bear market is actually more similar to our current bear market, just given the that this tested a second major low. The 600 and the 700 moving averages when they went under each other. And it was only really until the 700 went, or the 600 went under the 800 that we saw any significant progress. Let's look at if the 600 went under the 700, the 600 went under the 800. and it only happened at the end of the market cycle, right? So if this line goes underneath this blue line, um, we could see potentially an end of the bear market in December. Now, what I want to show you is, relatively speaking, the weighted average of all these different moving averages, right? The 100, 200, 300, 400, 500, 600, 700, 800. The weighted average of these in perspective to the price, okay? This is the sum. These are all weighted according to what their moving average is. So 100 would be weighted at a 100 weight. 200 would be weighted at twice as much as 100. 800 would be weighted 4 times as much as 200, and 8 times as much as 100, etc. And what we can see is that in all the bear markets, um, it's kind of hard to see this on one screen. Maybe if I set this to, no, it doesn't have a chart. If I set this, we see that the bear market in 2018, or and the bear market in 2015 also had this little spike down, like right here. It had this little uh, secondary spike down, which wasn't as deep as the first one because the moving averages had already caught up around a few months in to the bear market, right? Like right here. And right here, we've seen this first spike. And this might be the second spike. Does this mean that it's just going to go up afterwards? Well, one thing to note is that just because it's going up in this upward trend, that just means that the moving averages are falling back down to the price. The price within this time frame stayed relatively the same, right? If we look at this little channel here, it was oscillating between these 2 points, between 200 and 300 for since January of 2015 to October of 2015. So that lasted a significant while, right? What we can also chart is the distance between the bottom of this bear market to when it actually passed above zero, which is when it was past its weighted average. So we take the time date, timestamp between here and the time it actually passed through the weighted average. This was about 292 days for the 2015 bear market. Let's look at the 2018 bear market. This one was about 145 days. And let's look for ours right now. Ours so far has been about 131 days. So if we look at the trend, if there is one, we've seen that the bear markets in general are decreasing in magnitude if we assume that our bear market is to end relatively quickly. There is a chance that it could just keep going in the sideways pattern. But one thing that we should look at is when it reaches that 145 day mark in 34 days, or no, 14 days, exactly 2 weeks. So 2 weeks would be, um, let's see what 2 weeks would be. 2 weeks would be November 9th. So that's almost exactly at the time of the November 11th midterms, which is very, honestly, that's pretty interesting how it combines to form that consensus. What we saw right here, it was sort of the moving average difference was resting on zero. We saw it right here as well, right here before it actually capitulated and fell back down. And we didn't actually see it right here. It more rested on like negative 0.25, but it always went down to about -1. And at the times of the highest peaks, Of course, I don't have previous data before this because this 800 moving average only appeared at that point, but that was relatively near the peak. So I think we can pretty much say that that was the peak. The peak was about at 0.92. The 2018 peak was about at 0.85, and the 2021 peak was about at 0.76. So 0.76, 0.85, and 0.94. So that's a very consistent downtrend by the same amount. So 0.94 to 0.86 or 0.85 is about 0.09, and then 0.009 to 0.85 to about 0.76 is also 0.09. So the next market cycle we can expect um, about a peak of 0.67, just based off of our previous data. Let's chart where 0.67 is. Now, this doesn't mean that it's any higher, that it's not decreasing in magnitude. Of course, I do view Bitcoin as a logarithmically increasing monotonical function, um, but uh, we saw that, for example, this peak was technically higher than this peak, even though the moving average difference was higher on the first peak than the second peak. And that was because the moving averages had just congregated upwards. So this just shows the general trend of the moving averages in relation to the actual price. Okay. So that's one thing that you have to know. One thing I also thought was really interesting was about the COVID flash crash. This happened over really just a period of days where it went all the way down to 3,800, then went back up to 7,000 in a matter of days, less than a month. It perched exactly at negative zero point 0.5, right? So in terms of the moving averages, if we take the weighted average of the moving averages and look at the distance down, it just went exactly down 50%, which is very, very interesting to me. That tells me that this how this indicator works, because we're finding really, um, really even, solid numbers in all of this data, which I really like to see. Um, for instance, like when this bounces up right here, and how it just perches between these two. That's what I like to see in a technical indicator. If it actually has these very straight, um, very even numbers. Also, the monotonically decreasing function of the moving average difference. That's very intriguing to me. With time, what I might do, and let me know if you guys want this. What I might do is I might use this to extrapolate the future price. Now that we know that the future price will be about 0.67 in the moving average difference. Of course, we won't know exactly what the price is, but we can use this function to create a range of values where we can expect the next high to be. So what we're watching right now is just we want Bitcoin to go above this 100 moving average, right? In the previous bear markets, once it was actually above it, we saw the increase up, right? Once it actually went above it and stayed above it, that was when it actually started increasing up. So one last thing, I am going to chart the difference between the peaks and the lowest sections, because I think this is also very interesting to see. I haven't done this yet myself. I'm finding out as I show y'all. So this was for 411 days. This was 362 days. And this was 483 days. So the difference between 483 And I'm just what I'm doing right now is I'm just checking if there's any even correlation between the differences. So the difference between 362 and 4083 was about 121. The difference between 362 and 48, yeah, it was about 46. So we saw that the first bear market lasted, um, from the top to the actual absolute bottom about more than a year. This one was just shy of 1 year. Right now, if we count from the first peak, this is a little bit more than a year. If we count from the second peak, it's a little less than a year. So actually, let's look at this just from matters of peak. So that was 244. This was 362. That's a difference of 118. 362, 48. That's a difference of 46. So yeah, so there's no extreme difference between the two. Actually, let's look at the coefficient of this over this to see if there's any correlation. So 411 over 292 is about 1.41. 362 over 145 is about 2.50. And 45 over 131 is about 3.7. Okay, so there's no major difference in just the lengths of the bear markets. All right, I think it's a fool's errand to just determine this based off the lengths of when the bear market might end. But as always, we're just watching this 100 moving average, daily moving average, and we'll see, if this moving average difference actually starts going upwards. Let me show you the actual moving averages in relation to this. So this is a lot, I know, but you see once this 100 moving average is underneath the actual price, that's when it passes through zero. So this is how you see it, okay? When it's above all of them, then it's above one. When it passes through one, then it goes beneath one, okay? For instance, um, we saw right here, it passed underneath the 100 moving average. Thus, the 100 moving average went underneath zero, okay? Actually, I misspoke when I said that before. So it passes under zero when it actually passes underneath the moving average. So we're looking at the relative between the moving average and the actual price. Okay. Okay. So I'll come out with new videos sometime later this week. I hope you enjoyed this. I hope you found some insights from this. And as always, like, subscribe. I'd love some new subscribers sometime soon. So let me know if you or just hit that subscribe button if you want to see more content like this. Um, I'll show you some updates about when it breaks through this moving average, and we can talk about moving forwards, um, where Bitcoin might go and how to make money off of it. So thanks for watching. This is Technically Bullish, and I'll see y'all later this week.